Hey guys, Werner with Red to Black Academy, and I'm coming to you from sunny Los Angeles. And today I want to talk to you about how does a business that makes no money stay afloat? That's an excellent question we should be asking ourselves nowadays, because there's a lot of businesses that are staying afloat, yet they make no cash. And you as an investor, or if you're buying another business, you want to know why they're doing what they're doing and how they're staying afloat. Because in my opinion, you never really want to get yourself in this situation for too long. You don't want to be just staying afloat with what we're going to talk about, which is equity or debt. At some point, the piper's going to come calling for you. The hardest challenge when creating a business from a startup mode is getting it to cash flow. I mean, it is one of the most challenging things around a business, is getting that business to cash flow. It's not like I'm being too hard on businesses that aren't cash flowing, but if you're at an IPO level where 80% of businesses make no money and 20% make money, and it used to be the reverse, and the last time that this happened where 80% made no money and 20% made money was 2000 dot-com crash, the warning bell should be going off in your head, and you should have a little bit of knowledge of how a business can stay afloat without making money. So let's discuss the two ways. So number one is debt. Debt is where you go out into the markets, if you're a publicly traded company, or say you're just a private company, and you go and you raise money. Right? You raise debt. People loan you money. They don't want any ownership in your business. All they're going to do is going to give you money, and you're going to give them a certain percentage in return. Okay, so if you're making money in your business and you're just breaking even, meaning you can pay off the debt, right, with your cash flows, but you're just breaking even, then okay, you're humming along and you're just breaking even. That's where you are. And you want to know that when you're looking at businesses to buy or investing in businesses. You want to know their current financial health. Are they making money hand over fist like Texas Instruments, Oracle? Are they just breaking, or are they in the negative, meaning they're losing more cash? So for example, a guy loans you money or a gal loans you money and you're paying off that payment, but you're not breaking even. You're going into the negative. Okay, so how would that work? Well, then you'd have to raise either more debt from someone else to pay off the existing interest payment, or you go out in the equity markets and you raise equity. Say, hey, you want to invest in my business, whether publicly traded company or private. And in the equity markets, a lot of those companies, the investors will invest in these businesses expecting no return. In the private side, most investors are going to expect a return unless it's a startup and they know, hey, I may see my money or I may never see my money again. But these are the things you want to know, guys. Is the business, if it's not making money, well, how bad is it? Is it just staying afloat, it's breaking even, or it's going negative? And it's every year is going deeper and deeper into debt. At some point, guys, in this like low interest rate environment, when this thing like sets off, meaning bond prices in the bond markets, they go down, interest rates go up. Well, now it's going to be a lot harder to borrow money. Now you're going to look a lot riskier, and these businesses that were staying afloat with debt are going to go under because people are going to start pulling their money out and no one's going to give them money anymore. These are the things you want to start thinking about, guys. My advice to you is don't get yourself in a situation where you invest in these businesses unless you're really wealthy and you can take a little percentage and throw it in there, hoping that Netflix or Zoom, they turn it around 20% margins. So that's what a lot of these tech companies do. They keep running in the negative to get their market share, and then they back off and they take off a little bit of that marketing expense and they start running profits. But just assume that any business that's not making money at this point, there's no guarantee that they're going to make it in the future. And if it goes sideways, your money goes sideways. So I hope that helps, guys. Really understand that a business that makes no money is borrowing money from someone else, whether it's debt, has no ownership in the company, or equity, has ownership in the company. Either way, outside cash is coming in to keep the business afloat versus customers pumping cash in to keep the business afloat. You want this situation where customers are pumping cash into the business to keep the business afloat. That's a business. The other one is a speculation and we can argue whether or not it's a business or not, but you do not want to put your money there, guys. Find the businesses that cash flow. And if you can't find them, just sit on your cash and wait, start your own businesses. But I can't say this enough. Find the businesses that cash flow. And find the good ones that will continue to cash flow over 10 to 20 years. And get them at a phenomenal price, and you will do super well in your investing in business life. Okay, guys, thanks for watching. Like and comment. Get this message out to the world. Follow if you're not a follower. Subscribe. I look forward to connecting with each and every one of you in the future.